And in our business stories, Chinese exports to the UAE, including textile products, clothes, industrial products and metal-based products, may become cheaper after UAE's second biggest trading partner devalued its currency by the largest amount in 2 decades. The Chinese central bank cut its daily reference rate by 1.9%, but also promised to give market forces a bigger role in setting exchange rates in the future, raising the possibility of further declines. In recent months, the yuan has strengthened along with the dollar, making Chinese exports more expensive and raising the risk of job losses in industries that employ tens of millions of workers. Imports from China to the UAE, which is its #1 importer, stood at $21 billion in 2014, contributing to more than 11% of the total imports. In the first quarter, bilateral trade with China exceeded $12.8 billion, making it well-positioned as Dubai's top trading partner. China is also the UAE's second largest trade partner, as trade volume between the two countries stood at $54.8 billion in 2014 and is growing at 16% annually. According to economists quoted in local reports, the devaluation could ease inflation in the UAE as Chinese import prices fall, and would be good news for trading and logistics companies in Dubai. The UAE is among the top 3 countries for the Global Islamic Indicator in many sectors, including halal food, travel, fashion, media, recreation and Islamic finance, among others. It is estimated that the global expenditure of Muslim consumers on food and lifestyle sectors is expected to reach $3.7 trillion by 2019 at a compound annual growth rate of 10.8% compared to $2 trillion in 2013. The halal food market is expected to reach $2.54 trillion in 2019 compared to $1.29 trillion in 2013, accounting for more than 17% of the global market size. According to new statistics, the UAE ranked second in this market and has also ranked third after Malaysia and Bahrain in the growing sector of Islamic finance, which is estimated to cross the $4 trillion mark in 2019 compared to $1.21 trillion in 2013. The Dubai Islamic Economy Development Center, in partnership with Thomson Reuters and in collaboration with Dinar Standard, has announced initial trends from the 2015-16 edition of the State of the Global Islamic Economy report and the accompanying Global Islamic Economy Indicator ahead of the Global Islamic Economy Summit that will run in Dubai from the 5th to the 6th of October. The report, which is being compiled for the 3rd consecutive year, is set for release in the 4th quarter of the year, focusing on categories such as Islamic finance, halal food, tourism, clothing and fashion, media and recreation, and pharmaceuticals and cosmetics. Well, Dubai Marina remains popular with buyers and tenants. It saw prices decline by up to 18% in the 2nd quarter of the year. That's according to the latest trend analysis by the Dubizzle classified website. The Dubizzle report revealed that nearly 5 million searches were made for one-bedroom apartments in the Dubai Marina area between April and June this year. However, despite its continued popularity, sales prices decreased by up to 18% in some buildings. Another popular area, the Palm Jumeirah, managed to maintain its positive trajectory and saw an increase in sale prices of studios and 2-bedroom apartments, climbing from 1.45 million dirhams to 1.54 million dirhams and 3.2 million to 3.35 million dirhams, respectively. Commenting on the report, Dubizzle stated that the Dubai property market is softening as per the price changes experienced in Q2 this year. Prices of properties for sale decreased across Dubai, with the exception of studios and 2-bedroom apartments on the Palm Jumeirah, which increased up to 6%. Abu Dhabi, on the other hand, experienced price increases sales and rent properties. However, Al Reem Island saw a drop in prices for 1, 2 and 3-bedroom apartments. Dubai Parks and Resorts reported a loss of 29 million dirhams for the 2nd quarter of the year, as it expects to generate its first revenues by the end of 2016, following the opening of the parks to the public. The company said in a statement that its second quarter financial results were in line with its plans, adding that total assets stood at 7 billion dirhams at the end of second quarter. The cumulative project expenditure, including land acquired, amounted to 3.8 billion dirhams, which is an increase from 3 billion dirhams as at the end of the previous quarter. The chief executive officer of Dubai Parks and Resorts was quoted as saying that they are confident in their ability to open the doors of Dubai Parks and Resorts to its first visitors in October 2016 to support Dubai's tourism vision of attracting 20 million visitors a year by 2020. The project infrastructure is 57% complete as at the end of second quarter, up from 43% in the first quarter, with right engineering and manufacturing progressing as planned, with 52% complete and 80% of procurement has been completed. The company has over 160 employees in the corporate head office and over 9,000 workers on site. Its projected revenue in the first full year of operations at Hollywood-themed Motion Gate Dubai, Bollywood Parks Dubai and Legoland Dubai is estimated at 2.4 billion dirhams, with over 5,000 jobs generated across the sector.